Good evening. It's Vijay here. Today is Sunday, 8th of February 2026. Welcome to Reflections on a Sunday, where we discuss topics which are just outside the day to day goings on in the market. And these topics sometimes have cast a very heavy shadow on the way going forward. These are more of strategic ideas. And one such strategic idea which I'm going to discuss is the rupee. Now we know, for instance, rupee has hit 92, and now of course it has strengthened from there. And if you really look on a year-on-year basis, it is down by about 3.2%, February to February, 25 to 26. Of course, it had strengthened sometime and then it weakened much higher, and then finally it's come down to 3.2. This is what I got from Grok or even the AI based other information. So, information available on the net. So, let's take 3.2%. So, surely dollar has been weakening, the DXY has been weakening against other currencies, and rupee has weakened against dollar. And people are now talking about, weak rupee is bad for India. Now, let's examine this as whether only Indian rupee has weakened or there is something more to it than when compared to the global currencies. So I did a deep dive, and now let's look at with respect to dollar. So now we have weakened 3.2%. So what has N done? Last year N has weakened 3.48%. That is, N has weakened more than the Indian rupee against the dollar. But nobody is talking about N weakening. Nobody is talking about foreigners running away from Japanese market. They're only talking of foreigners running away from Indian market because rupee is weakened. What about euro? Euro is actually strengthened against the dollar. So now, if you are going to be strengthened against the dollar, which means dollar is becoming weak against euro, then they should not be putting money. Europeans should not be putting money in US. If you go with the logic of India not getting money, foreign money, because we are weak, dollar is weak vis-a-vis euro. So therefore, they should not be getting any money from Europeans. Now let's take euro versus other currencies. So euro versus rupee. Rupee has weakened about 15 to 17%, significantly higher than what we weakened against the dollar. 15 to 17%. Let's take 15%. How much N has weakened against euro? 12 to 14%. So about 13% it is weakened, which is not significantly different from what rupee has done against the euro. What about US? US weakened about 12.56%. So which means the US dollar is weak significantly as equal to N, slightly better than rupee. It is not that they are any better or rupee is any worse. Then let's take. I was looking at some very interesting data today about Norway versus other currencies. Now, Norway. Why is Norway important? Norway is important because it is first of all, it's not a part of euro, and secondly, Norway is a huge investor. The Norwegian fund, the sovereign fund, is the largest fund in the world, and they invest across the globe. And a lot of people copy the Norwegian funds, methodology. So Norwegian sovereign fund is very, very important. So let's see how Norwegian fund, Norwegian currency, kronor is what's called. How has the other countries fared against kroner? So take US dollar. US dollar is depreciated by about 13.58 against kroner. 13.58, important number. Yen has depreciated by 17% against the kroner. And the Indian rupee has also depreciated by 17%. So even with Norway, we are not very far away. So this article in this Norwegian magazine, which I read, very interesting, where they're now looking at India with hope. This is what I've been driving. That when India, which was supposed to be a closed country because of its tariff, is now opening up, whether to European Union or to US or to Canada or to many other countries, then the investors will have a different idea about India. They will now begin to think about the population as a demographic dividend. They will also think about will India start growing or stop growing. They've seen that India has started growing as far as the overall GDP is concerned, we are number 4. They know that. Now, whether you may say it is fudged, it is not fudged, but data is data. And then you are also seeing what the budget has done. Superb fiscal discipline. People in the stock market may not like, because they have increased the STT. Then you look at the kind of money which is being put in infrastructure. Consistently, they are putting it. And then look at the Middle India. The Middle India is the mid caps, small caps. They've all been growing significantly, more than double digit in the last 1 year, which is very high when compared to any other country's growth in the stock market. Of course, the large caps are not growing. Large caps are just about 8%. So that is where the index will get affected. So if you're going to look at only index, we may not do very well. We may be middling. For instance, as I mentioned many times in the past, between 1992 and 99, 7 years, the index went nowhere. The Sensex went nowhere. 4,500 on April 2 of 1992 and 4,500 in September of 1999. So nearly about 7.5 years, the Sensex did not go. However, India did a lot of reforms. A lot of mid-sized companies came in. A lot of small-sized companies came in, which became big. The IT sector, for instance, grew in that period. The automobile sector grew in that period. Cement grew in that period. And pharma grew in that period. Lots of sectors did grow, and a lot of companies did well. Two-wheelers went up significantly during that period. Maruti was not listed then. So, even though it grew, but it was not, nobody could take advantage of it. HDFC Bank, ICICI Bank, they all came during that period, and they all grew. So it's not necessary that the index has to grow, because the top line is still not growing good enough for people to feel attracted enough to come into India. But the FIs came heavily into India from 1994. So they didn't look at the index. They looked at whether the last man standing, the Middle India, is it growing? It was growing at that point of time, though the large caps are not growing. Same thing now. I won't be surprised if you have something like that now. So we are not investing in index. By and large, a typical investor invests in stocks. And most of the stocks are in mid cap or small cap or micro cap. So just if you look at your portfolio, there could be a lot of companies which are doing well. Of course, there may be a lot of companies which may not do well. For instance, real estate may be under pressure. For instance, defense may be under pressure. This FMCG may be under pressure. Railways may be under pressure because the share prices have gone up heavily. But there are significantly good number of companies like PSU banks, metals, natural resources. These are companies which are doing well. Their performance is good, and a lot of other companies which I'm not mentioning here, but they're slowly turning. The tide is slowly turning. It is not that suddenly everybody will start showing fantastic results and everybody will come and buy them. So therefore, the foreigners today have no reason to ignore India. They had reason to ignore India because we were a closed economy. Today, we are not a closed economy. Especially in the last 3 to 4 months, we have done so many deals. We are the deal makers, not Trump. Of course, the US deal is not good for India. I have mentioned this. This, as far as politically, it is not good for India. But as far as the stock market is concerned, I think it is really a bright thing for India. I feel that the going is going to be good for most part of the stock market, not everything. Maybe the index may not do much, but lots of stocks will do well. Again, you have to pick and choose. So whatever you do, I hope it is successful. And I also hope you got some new perspective, which is Indian rupee being weak is not that we are the only people in the world who are weak. Compared to other countries, different countries are weaker, especially US, especially Japan. So when US is getting investments, that is, I'm talking of portfolio investments, when Japan is getting portfolio investments, why should India not get? Think about it. Have a good evening. Thank you for joining me.